that'll help. Today's session is about making an impact. You're all familiar with me. I'm Yogja Singh. I'm an associate director with KPMG in India. We've been conducting this whole mentoring series for you as part of our KIC mentoring sessions. Some of you attended our sessions on, climate change and sustainability. Some of you attended the session on business modeling and creating a business plan. And today's session is around making an impact. The session is going to be conducted by Amit Bhandari, who's a partner with us in our deal advisory practice. Amit will bring to you his experience of sitting across those VCs, sitting across some of those startup founders, and how do you really make the right kind of impact, and what is it that it would take to for you to uh, essentially leave a lasting impact on these people and sell your solution to them. So with that, over to Amit.
How do I find that out actually? Can people hear us?
Tushar and Himanshu, can you let us know?
I can hear you properly, Yogja. I'm not sure whether the rest of the people can hear us. Yeah, Tushar says yes. Okay, great. Okay, good afternoon, everyone.
But Amit, we
Uh,
can't see the screen's actually blank.
you can't see me?
Yeah, Tushar, Himanshu, can you confirm, or is it only me if we cannot see Amit? Okay, sorry, Amit. I think it's a problem at my end. They can see you.
Cool. Okay, great. So, hi, good afternoon, everyone. Sorry for the technology glitch. We were hoping to start this at 3, but we've got started finally now. I'm a partner with the deal advisory practice in KPMG, and I run a practice called Consumer and Retail within due diligence. I've spent a good part of my professional career with KPMG now. I've been with consulting firms for close to 20 years now, and a large part of that 20 years has been spent in M&A, which is advising clients on deals, whether it's on the sell side or on the buy side. I'm based out of the Gurgaon office of KPMG. The session and the briefing that I got today was that we need to maybe discuss certain ideas or certain specific elements of what makes a good pitch to a VC fund. The short answer to that is, to be honest, it's very, very specific to the situation that you are in at that point of time. There is no single piece of advice that works in every situation. And I have personally worked with almost every large venture capitalist fund in India, worked with almost every large private equity fund in India. In every deal situation, every transaction, every individual that you deal with is different. And hence, your approach has to be customized to that conversation that you're having. And in 99% of the cases, uh, what I have seen is the whole genesis of the funding is based upon only and only the core strength of the founding team. The idea, and we all get obsessed with the idea, unfortunately, and I don't blame anybody because that's the core, right? And that's what we have worked so much upon, and that's so close to our hearts. The idea is only 1%. 99% is the conviction of the founding team, their approach to the whole process, and their ability to showcase that they have it in them to see this through. And 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 also the fact that the founding team needs to have the right balance between them of individual personalities that are in a way coexisting, so as to speak. If you've got founders which are diagonally pushing the company or the project in separate ways, that comes out very very quickly in front of the venture capitalist funds that you will be talking to, or you'll be presenting your ideas to. So you have to come across as a very cohesive unit, a team which has got the right mix of people, has the right approach to the project, to the idea, to see it to the culmination, uh, can uh, can prove the sustainability and scalability of the project, and most importantly, have the ability and confidence to sit in front of them and say that we deserve your money. It's very simple, right? I mean, if you have to internalize this for your own self, think about the fact that you personally have to put money in a company or in a project. uh, why would you put your own personal money in that? And when we talk to VCs, a lot of that money that they have actually raised is based on their personal reputations. So think about what they are doing. They are raising funds, they're raising that equity from their connects, from their contacts, whether it's large organizations or individuals. There are even HNIs that invest in VC funds, and somebody is entrusting them with the fact that they'll be able to scout for good companies and invest that money wisely so that they can generate returns for the ultimate investors. So a venture capitalist is nothing but a fund manager. And that fund manager will put money in a company only if that fund manager sees returns. It's a very crude way of putting it, but unfortunately, that's the truth. And if you put yourself in their shoes, would you put your own personal money in that idea, in that company, or not, is what you need to judge. uh, I wanted this session to be a little bit of a Q&A type of session, so I'm not sure how will that engagement happen, because I can't see a screen where I can get questions up, or we can do some chats. But let's maybe go to that. We'll deal with that once we get ahead. But the whole idea of the call of this conversation today is for us to explain to you in some shape and form that what is it that the venture capitalist industry, or the venture capitalist uh, fund owners are looking for when they look at new ideas, new projects, new teams, etc. uh, Maybe we can also set up that deck. Might just help to anchor the conversation. Yogja, do you have that deck handy on you? Does anybody have that deck on them? I think there are some network issues with Yogja. Maybe once you join back, we can put back the deck. But okay, let me try and break this down into three parts. Let's take an example of maybe a recent funding that has happened. Burger King hit with an IPO in the market. They priced it very sensibly, because of which it got oversubscribed within maybe a few hours. It hit a circuit on day two. It went on to be probably the most successful IPO in the first 1 week, where the price has actually gone 2 times. Why has all of that happened? Can anybody guess on this platform? Tushar, Himanshu, is there a way for people to respond to queries and questions? Okay, in comments. I maybe don't have the comment section open. Okay, I can see comments now. So can anybody take a guess why did Burger King become such a successful IPO? No answers so far. Okay. Some new comments coming in. Demand and supplies, customer-centric approach, undervalued during pricing, already well-built brand name, brand image, post-COVID F&B market. Brand image, recent ads, hype around it. There's a bull run going on. People just want to get in action for the listing gains. Okay, robust franchisee model, valuation, strong expansion plans. Okay, marketing. Somebody has said geo. Well done. FMCG sector focus during the pandemic. Okay, so interesting answers. Uh, a lot of it actually is because of the fact that they priced it well. If this stock was priced anywhere near to its competitors in the market and they were already listed companies like a Domino's and a McDonald's, which is listed, QSR actually has taken a beating in the last 6 months. To be honest, this year has been probably the worst year for them. Most of QSR chains have gone and done rental moratoriums and whatnot to just keep afloat. So, and there is no transaction that has happened in the QSR space in the last almost 12 months now. The reason for that is that people are just trying to cut corners and basically save their jobs in most of these QSR formats. It's only now in the last 3 or 4 months that people have started venturing out and ordering out and delivering, and all of that has started to happen. So actually, they were in a very very bad shape. Most of these QSR companies post the pandemic, but what has done wonders for the Burger King IPO is purely just pricing, and they were very clear on that from the beginning. It's not just the pricing of the IPO, it's also the pricing of the product. They know they are entering a market which is already well penetrated by a McDonald's, their primary competitor. If you compare their menus like for like, they will always, everywhere, be at a marginal discount to McDonald's. And that's the principal philosophy they've applied even in the IPO. The value of the discount is much higher, but the fact that they priced this so sensibly and so intelligently, they could have got married with the idea that no, we are a global giant, we should be priced at least, if not more than what McDonald's did. They went down at a significant discount on the McDonald's valuation in India right now because they know that they're a newer brand. Their business model is proven, tested, but not scaled to the same level as that as of a McDonald's or even a Jubilant, which is Domino's. Domino's is practically in every city in India right now. Uh, so is McDonald's, and a bunch of other QSR brands as well, like the likes of Pizza Hut and KFC. So, and Burger King is not that well penetrated. So they were very clear of the fact that if they were married to the idea that no, ours is a superior product, ours is a superior brand, we should get at least the same valuation as a McDonald's does, they would have failed miserably in their IPO. But they were sensible and they did it in the smart way by going in with a significant discount, and within a couple of weeks they actually reached the same level of valuation because they let the retail market actually price them instead of being priced by merchant bankers. So the reason why I took that example was that for the same nature that we are all very very married to our ideas and married to our brand philosophies, and we think that we deserve the best. Just think about it. It's like you going and wanting to sell your own house. You will always want the best price, right? And you will want at least the same price at which a similar house in the same locality has been sold maybe 6 months ago or 3 months ago or whatever the time period. So if they wanted to be sold at the same rate or same value at what a large competitor is, they would have nobody would have put money. They would have said, okay, why should we put money in you? There's already a competitor available in the market at the same valuation. So what's in it for me, for an investor? But gradually and slowly, it was very clear that it's the first of all, the pricing is always future linked. It's never historical. It's never now. It's always future. Not even to FY21. It's FY22 and beyond. Actually, to be honest, and the fact that they priced it so sensibly meant that their business case and their business plans can take them to that scale with that capital requirement they have put, and the return on capital employed becomes far more superior than any of their competitors because of the pricing at which they had put. ROCE is the single most important ingredient when you're talking to any fund, any private equity, venture capitalist, anybody. For them, the only and only metric that matters is ROCE, is return on capital employed. How much money will they make from this investment when they exit this portfolio? Some may do well, some may fall flat, some may do exceedingly well. And it's that mix of portfolio of companies that they work with gives them that that balance sort of returns that they generate. By the way, not a lot of venture capital companies in India are very successful, so you should keep that also in mind when we're thinking about pitching ideas, etc. That when they look at a company, they're looking at a company which has some spike, some sort of spike in any domain. And what is a spike? Spike is something that is internal to that project, that company, that idea, the team of founders, something at which they are the best at, something which only they and they can deliver at, and nobody else. So you have to find that spike in you. It's a very well used consulting terminology. If you search about it, you will get it almost everywhere. Even in consulting engagements, we look for spikes when we recruit people, because we want to know you may be the best at anything in the world. It's about figuring out what you are best at. And it may have got nothing to do with your current line of work. You may be very good at problem solving, or you may be very good at troubleshooting, or you may be a very good cook for that matter. Can you bring that same passion and energy to the project, to the company that you're trying to scale up? And if yes, and you can prove it with examples, then you have made your case. Otherwise, most people will listen to the whole pitch, uh, and then move ahead to the next one. It becomes a very sort of mechanical process of listening to pitches and moving to the next one. If you're able to impress your audience with what is that you bring to the table, and by you I mean the team of founders, and what is unique in that team of founders that is going to make sure that this company is successful. And again, I'm saying it's not the idea. uh, and I will keep on saying that, because that's very, very important for everybody to understand, please, that don't get married to the idea. The idea obviously has to have legs for it to run, for it to be successful. There's no doubt about it. So that's the basic ingredient. But you have to move ahead from the idea on how will you approach that whole process of building up a product, a company, a service from scratch, and how will you deliver value to your customers? Who is your customer, first of all? Are you even clear on that? A lot of companies, a lot of pitches that we have seen and we've actually heard of in the past, there is no clarity on who the ultimate customer is. I am creating a product for somebody whom I'm selling to. So is the person who is giving me revenue my customer, or the person who's going to use that service eventually is my customer? We should be clear. We should be absolutely clear on that. And unless and until that clarity of thought is with and that conviction is with you, you will not be able to relay that across in your pitches. And hence, it's imperative for us to be clear on those two fundamental concepts. One is, what do I bring to the table? And number two, how will I scale this up into a potential that big, or a company or a project that gives return on capital to the investor? That's it. If you're able to answer those two questions, and you can actually break down your presentations and your pitches into these two parts, where you explain why you are the right person to do this, and how will you make sure that the person putting money in you will get you the returns that they're after. That's the premise. If you're able to answer these two questions, you're through. Sorry, I'm getting a little bit of pause on the presentation. Yogja, are you back? Let me try and see if I can put up the presentation. It should just help us summarize some of the things that we've just spoken about. Apologies.
Amit, we have the presentation on the screen. Maybe you can just go back to.
Fantastic. Yeah, okay. I can see it now. Sorry, my bad. Okay, so this is a little more technical in terms of how you would look at a pitch, but these are some guiding principles that you can use. And those two things that we just spoke about, the fact that what is the proposition that you bring, and how will your investor make money from this project. If those are built into every every part of this pitch, you are home. If those are missing, then unfortunately, as I said, it will be another pitch that they will hear and move on. uh, See, a lot of, and you have to also think about the fact that who is your target audience. Fortunately or unfortunately, in our country and everywhere else, a large part of the venture capital industry and private equity industry is made up of people with who have a very homogeneous sort of background. It will be somebody who is either got an engineering background, or somebody who's got a financial accounting background, or somebody who's got an economics background. In a nutshell, it is somebody who understands numbers very well and who can see through information and join the dots to get to that decision. So you have to help that person take that decision basis that skill set. So a lot of times I've seen when pitches are made, they are so vague that they don't actually even get to that stage of a business model. uh, the clarity of thought has to be so immensely structured that the answer of return on capital should automatically come out from your conversation. Every time we approach a problem, we see, okay, here is a problem. How will I drive revenue from this problem? Okay, so then we need to know what's the market size. Where do I fit in, or where does my service or product fit into that market? Am I a disruptor, or I am only being part of that pie? If I am a disruptor, then the angle is very different. If I am part of that pie, then what share of pie am I talking about? All those things, which is basically your value proposition, has to be crystal clear from day one in your heads. It can't appear suddenly on the presentation. It will never appear on a presentation if you start writing a presentation. It has to be clear in your head. The map should be clear in your head. And whatever the structure of that flow that you want in that pitch should come on the presentation. The presentation is only a tool for you to speak up and explain your thought process to people. It can't be the reason why they will put money in you. It's only a form of communication, right? So the fact that your value proposition and your business case gets reflected in the presentation will only come if you are yourself clear on what that real market opportunity is of or the problem or the service or the product that you're trying to pitch for. The other very important factor is, a lot of times we do a very good job of creating the whole product along with the prototype. We have done all the research possible on the market, on the competitors. We have a business model in our pocket. We've got everything stacked up. Where we fail is to explain the rationale of why do we need this funding for. If you've got everything sorted, then why do you need my money? That's the simple question which a fund will ask. So we need to be very clear that it's not just about the simple act of getting investment dollars. It's about being part of a VC ecosystem where you may fail or you may succeed with the idea, with the product or service, but you will also gain immense experience as part of that process to help you succeed on something else, perhaps. And again, that comes from your approach. And whether your approach is one dimensional or multi-dimensional, if you're looking at it from a very sort of strategic lens, that here is my product, here is my idea, it is the best in class, I am going to disrupt the market, I will do this, etc., etc., very good, fantastic. What if you fail? What will you do 6 months down the line or 1 year down the line once the product has failed or the service has failed? What is your backup plan? I have no backup plan. That can also be an answer. But that approach of getting there is what is important. And hence, the reason for getting into this pitch has to be very clear, that why am I here? I am not here just to make an investment pitch. It's just not about getting that investment into my organization. It's about the fact that there's a process that I'm trying to there is a whole process that I have applied to my approach. Here is the idea, here is the scalability of the project, here is what we think is the right solution to take to market. by the way, this is the market, and we've done all the homework around it. Potential competition, we have checked that as well, and we check all those boxes. And hence we've come to a conclusion that if we potentially run this for X number of months or X number of years, there will be some cash burn, for which we obviously need fundraising. But after that stage, what we need is the ecosystem to grow beyond where we have actually scaled ourselves for. So if I want to go 2x, 3x, 4x, 5x of my revenues in a certain period of time, what are those ingredients that I need? What is the help I need from the VC funds to get there? Maybe they have a portfolio of companies that can help you source more revenue from each other. Maybe they have a portfolio of people who can become experts on your panels and help you grow in the right in your markets, in your geographies, in your product verticals. Adjacencies is a huge thing which people ignore. We are again so married to the whole product, service, and idea that we ignore the adjacencies along with it. So if Burger King was only selling burgers and ignoring fries, the average ticket size would fall down by 30%. Almost 30% of their revenue is built up of fries. They're a burger company. And not the remaining 70% is also not burgers, by the way. So we need to think about those adjacencies very, very clearly and clinically in our presentation and our pitches. That's the only time that I've seen people really falter, when they only and only think about the small box of their project. They're unable to apply that thought process to the other parts of the ecosystem that they're working in, and how can they scale that up using the influence of the VC ecosystem and the funders that and the backup of funding that you have with you. I think principally, and there are more slides after this. I don't want to go into every slide, but this is the structure that we think is most relevant. We don't need to go into every slide. Just stay with the same slide. Yeah. So this structure is relevant. It just helps you think through of what you are proposing to the other side. But please be very, very clear of point number 9. Point number 9 is the most important on why are you here to raise funds. I'm happy to take questions, and maybe let's just do some Q&A through the comment section, please. Can't hear you, Yogja.
Tushar, if you can help us just look at some of the questions that are coming in, because this window has not got refreshed for me. So to all the audience, if you have any queries around, your pitch, your how do you really make that idea, you know, popular, please do ask us questions. We have a question actually from Yajur here. He's checking that, you know, you mentioned that it's a different way for a disruptor. So could you elaborate on that part?
Sure. Okay. Let me try and take an example. So traditionally in India, uh, mattresses were always sold through a furniture shop or through some niche mattress shops in a furniture market. Wakefit, which is a brand which is well known now, many years ago, we did work with them when they were on the idea pitch at that time, and their value proposition was that why can't we sell a product like a mattress online? To which the simple argument that every fund had, that have you ever seen anybody buying a mattress without actually sitting on it or testing it out? And the answer to that was no. So how will you make sure that you can sell a mattress online to people? So what they did was, okay, you test the mattress out. We will give you 30 days free returns, no questions asked. We will take care of the freight. So I am delivering a product to you free of cost for 30 days. You test it out. If you're unhappy with the product, you can sell it back to me, and I will get it picked up at my cost. That specific element of a 30-day free returns of no question asked catapulted that brand into the number 3 mattress company in the country right now. Obviously, it has taken them time, but if they were married to the idea that no, we will sell only online, and hence we don't need to prove our model or the benefit of the product to anybody, they would have fallen flat. But the fact that they took that feedback, that nobody in our country will buy a mattress without testing it or without using it once, they created a business model out of it, and that is what I mean by a disruption. They disrupted the market by selling something which was traditionally only sold on and off in an offline channel, and they converted that into a business case for themselves. They are now scaled up into almost a furniture supplier. So they're doing not just mattresses, they're doing your entire house, your beds, your wardrobes, everything. And hence, from a small mattress company which was maybe less than 10 crores of revenue when I had worked with them, they are currently run rating at 250 300 crores of revenue in a span of less than 4 years. So you can imagine the scale that they've reached in 4 years or 5 years. But that's not because of the fact that they so one of the very clear differentiators for them was that one of the founding partners actually had an amazing background in terms of manufacturing. He had run a business of manufacturing, and he understood the elements that go into manufacturing a mattress. So their back end was sorted, and they sorted the front end through selling online. That is what a disruption means, and that's the value proposition that you need to be able to showcase to your investors.
Thanks, Amit. We have another question here. One is, of course, Pritish is checking how does one estimate the market size of one's product. The other is around, if an idea already exists and it's not famous and say it will not gather much market, then should they still go think about it and proceed with that solution?
Sure. I think let me try and answer the market size question first. So the market sizing is a very extensive exercise and it can't be done under closed doors. When we do market sizing for engagements, we actually send out our teams on ground. We engage with experts in the industry to understand and get their perspective. From a very simple fact that if I have to find out what is the QSR market size in the country right now, there are obviously research reports available. But what I will do is I will ask my teams to do store checks, go and interview store managers for various brands, ask them what is your daily sale, what is the product that sells the most, what is what is your average daily sale number, what, who is your closest competition in the next 2 kilometer radius. I'm just giving a very simple example on how you approach the problem, but it can't be done sitting on a laptop, unfortunately. You have to ensure that you have to go out in the market and assess that market for yourself, and then you, using the right tools, extrapolate that information to come to a right conclusion. You obviously can't do a primary of the entire ecosystem, right? So you choose a small smart sample size, and you use that data to extrapolate, validate with secondary information that is available already in research reports, and talk to a few experts to ensure that are you ballpark in the same range or not. That's how you do market sizing.
Thank you, Amit. I'll move on to
The
the next.
idea, yeah, go on.
So actually, this was around that what if an idea already exists, but it's not famous or it was not able to gather, enough attention in the market, then should the team still go ahead and, because they think they can improve it, so
Yeah,
should this?
no, sure. So it's again, I'll come back to that point on the adjacencies. See, your idea on its own may not have legs, but can it create a bouquet of services or solutions that can actually catapult that idea into something which is much stronger or much bigger? Taking that same example, if I was just selling burgers, my average ticket size would have been maybe 150 rupees a bill. If I add fries to it, that becomes 200. So that idea becomes solid on its own. I am recovering the rental cost by just adding a product which the cost of goods sold is actually much cheaper than what a burger is. Uh, I'm without getting into too much of numbers, but all I'm trying to say is that the idea may exist. You may have populated that idea with the VC community already. You maybe got a lukewarm response. Do you stick to that idea or not? Depends upon, first of all, your conviction, and number two, are you convinced that you are able to create a valid business model out of that idea? Can you generate revenue? If yes, can you showcase it? The best way to do it, the proof lies in the pudding, right? So can you do a pilot of that and prove it that yes, this is workable and uh, we can create a revenue stream out of this, and I am able to take this to market in a lot more confident fashion. And also, can I think of other things that I can add to this, or is it just something on its own and on a standalone basis that can sell? So you have to go down that path of doing the hard yards on thinking very, very critically and clinically, when you come across a situation where your idea is not getting too much interest in the market.
Thanks, Amit.
I think the
Moving
next
on to the
question
next
is
question.
yeah, I saw a question which said that at what stage should you reach out for investment? Right before the big cash burn cycle, the answer to that is you should reach out for an investment at the very beginning, even before starting out on anything. Why? Because you want to test waters very, very early to understand whether people would be willing to invest in a product service of that type or not. As I said, does the idea have legs or not? That needs to be tested. And the best way to test it is actually create a prototype and try and build it up as a pilot and see if that works. If that works, yes, people will be interested.
There's an interesting question from Soumya where she's saying that, we need investors because we need to burn cash. But how should we really select the investors? Because then they're similar to, possibly taking a bank loan. And is there any other value add that an investor does for us?
Sure. Uh, how do you get a bank loan? If you were supposed to get a bank loan for yourself, what's the process? Suppose you want to buy a home. You want to buy a home, you want to take a loan, something which is called a home loan. Your home is on mortgage. You are giving a collateral for that. If you're able to give a collateral for something, you can get a bank loan. If you're not able to give a collateral, you will not get a bank loan. And bank loans come very cheap. Cost of debt is nowhere close to cost of equity. The reason why I'm going to the VC funding through that process, or to a private equity fund, is the fact that I don't have anything for collateral. First of all, I just have a skeleton idea of a company in my head. It's not really a real company also at this stage, perhaps, and hence nobody will give you a bank loan at that stage. Maybe some state development corporation, perhaps, who also have similar incubation sort of centers which give funding and debt funding for new ideas, but those are far and few in between. The VC ecosystem brings to you the collective might of multiple founders. It also helps you sometimes to get co-founders. In a lot of situations, we have seen where there are individuals with flashes of brilliance who set up a companies, but are struggling to scale it up because they don't have the right people to work with. And many a times when they come and sit for these pitches, the fund managers actually sit them, hey, hang on, we might have somebody whom you might work very well with, and can you guys then collaborate and think about how can you structure your process a little better, and how can you join hands to make this bigger in terms of the scale that we're talking about. So it's just not purely simple investment dollars. It's a lot more that they bring to the table, and we need to be cognizant of that even in our pitches, and hence weave that solution accordingly.
Uh, we'll be cognizant of your time, Amit. We'll probably take up the last question here, which is what's the best way for financing a business which doesn't require much capital, like maybe a non manufacturing firm?
Bootstrap. Nothing works better than bootstrapping. If you can somehow manage to remain bootstrapped for a decent amount of time, but with that conviction in your head that if you were to raise funds, you will get money. So I'm not talking about being foolish of bootstrapping and putting your life's earnings behind something which is not scalable, which is not going to get you money. Your idea should have the legs, you should have the conviction, you should have the right business model, and there should be people who should be willing to give you money. But you should have the conviction at that stage that, okay, this is not the right time for me to go and get money because I don't want to get diluted at so early in that stage. Then I will probably end up owning 2% of this company when when this really hits the market and becomes 5x 10x of its size. What's the point then? So bootstrap till the point you can, with that conviction that you will be able to raise funds at a short notice.
Thank you, Amit. I think some of the other queries that are coming up are very specific to the challenge in terms of basic addressal of the problem. So I'm just trying to look where you could help the students out. So there is a specific question here that confidence of investing in an idea increases for the VC mostly when the investor puts their own capital. So how do we decide how much is the lowest margin to invest ourselves to gain that confidence?
There is no threshold, to be honest. We were just talking about bootstrapping, and this is exactly the question that you're asking. There is no right number that I would invest X percentage of my life savings into this product. uh, there are examples, and I've seen many people who put in their life's earnings in that, and for some it works, for some it will not work. So you can't have a threshold based on that. Your threshold is based on the fact that is the conviction there in your head and in the head of the people that you have gone and pitched this idea to, that this has legs and it will run on its own for a certain period of time, and you are only doing bridge financing for that period of time. Think about it like that way, that you're buying a house, uh, you've invested already in the real estate. Now you're just doing up the interiors. So you're just putting your money to do up those interiors to ensure that that house becomes livable. But the fact that that house exists and the real estate is taken care of is already there. So you can't be bootstrapping some behind something on which you yourself don't have 100% conviction on, or you've not tested that enough in the market that it will help you sort of, or it has the legs to get funding from the venture capital industry. One more question perhaps we can take.
Uh,
You said it's about the
sure, Amit.
people, the team is here, but we might not be able to cover some grounds for this competition. Is it okay if we have concept ready and not working prototype? I would seriously encourage if you have a working prototype. We've seen that being the key differentiator in the past, and I'm pretty sure that's because, see, it's just put yourself in the shoes of the people who are judging you. Would you rather go with a concept which is unproven, or you'd go with a concept which is at least moderately tested? And hence you have, that also shows that the approach of the team is the right approach. They're leaving no stone unturned to ensure and to explain that we are trying to do whatever we can, which is in our which is in our domain and which is in our might, to take this to the logical conclusion. And creating a prototype will always help.
Thank you, Amit. I'll take up some of the other queries, but thank you very much for your time, and we'll circle back if there are any other specific questions that come up which you can help us address at a later stage.
Sure, happy to. You've got a wonderful background behind you, Yogja. I am actually working out of my daughter's room, so I have a much more interesting one though.
I'm quite certain. Amit. Thank you.
Thank you. Bye.
Okay. Uh, I'll just take up the rest of the queries. I know that I was picking up specific queries. Now, there's a question here where you specifically asked us, Prashant, about aspects such as sustainability and environment changes take time, and how does one assess them correctly and incorporate them in the pitch right now? So, while it may take time for you to measure the actual outcome, but you may actually be cognizant of the fact that this could be a possible outcome because this is how it will impact the environment. So we at least expect you to be cognizant of that and to talk about it, and then maybe do some projections based on estimation if not actuals. We don't expect you to do a very extensive work, but like Amit said, at least some sampling, or possibly just I'm quite certain that whatever environmental impact it is, if there is a similar scenario which exists or a close to similar scenario, then I'm sure that there can be some extrapolation of data that can be done or some projections that can be created. I hope that addresses your query. Uh, Danisha, you had a question about if you're from a different education background and an idea is a whole different thing, how are you going to make your pitch stand out from others? Then my recommendation would be that you better get those sector or those specific subject matter experts on board, because at some point of time you would need to speak that language. You would need to make sure that you have a person who knows what they are talking and who knows the nitty gritties, because even if you're pitching it to anyone, they can ask you, any specific aspect of that. Unless you yourself become that subject matter expert, recommendation is that find that subject matter expert and get them on board. And that's what we recommend to a lot of teams at a later stage. So should they need someone who possibly is the financial modeling expert, or who possibly is the technology expert and needs to do the coding for them, then you need to go find those people outside and get them on board, or look at your network. And also, that during the course of this competition you will come across people. You will network with them, you will discover that maybe there are other teams that possibly complement the strengths that your team has, and that could be another way, especially in the long run, if you think about taking your solution to the market. The other question here is there a metric? So, Mahek, you had a question wherein you're checking, is there a metric or a way to judge or convey scalability of the idea? So, there definitely is, especially given the idea. And I'm going to again go back to the solution that we had last time. The team that won the global challenge, and they were working on the mining sector. They actually started with a small mine in India. But then when they started thinking about it, they did an extrapolation on, how much is the what is the extent and spread of the mining sector in India. And then when they realize that their idea is scalable even to, because there is a problem that they're addressing, which is a common problem across the globe, then they actually looked at the mining sector across the globe. And that's how they looked at the scalability of this thing, their whole solution. And then they came up with a phase wise plan that maybe they'll start with India, and then eventually they'll probably pick up one or two countries and slowly and gradually keep expanding. And that's how the finances also got built in. So that's exactly how you can go about with the scalability of your plan. Now, Shreya, you have a question here, which is about multiple problems in one solution, or one problem in one solution, or which should we work on. I think it really depends on how strong do you think your solution is. There is no correct or right or wrong answer to this. Either of these approaches would work, but as long as you have a concrete problem and a concrete solution for that problem, you can adapt any one of those approaches. So, Shunyam, you had a question about, what do VCs find themselves more inclined towards, a venture that is one-stop shop, or for a plethora of problems, or one which solves one problem at the best. So it really depends on what that problem is. There could be one problem which is possibly massive in terms of its, impact that it has, whereas, they could be, if I look at the other scenario, it could possibly be addressing smaller problems, but it may not be as massive in terms of its impact. So my recommendation there would be that look at the impact of what you're trying to solve here, and based on that take a call. VCs would generally look at that impact and then take a call. They wouldn't really decide. I don't think any one of those approaches would be wrong or right for them, but what would really matter is the impact and the potential scalability of what you're doing. That would really matter to them. Uday, you had a question on what are the basic ways to tackle with competitors to their business plan. Now, I don't know what your solution is, but I think you'll have to then start looking at similar competitors and figure out what the business models are and figure out where the disruption would lie. And if you were to take the example of what's really happening in the Uber and Ola type of industries, that's exactly what's happening. They're studying each other's business models and they're coming up with something that doesn't cater to that specific segment, or how do they really beat competition in that segment. So we'd be better placed to advise you if you know what are you targeting. But ideally, yes, you would have to look at competition. But if it's a sector where you think nobody's really ventured, then you have a first mover advantage of creating that business model. However, I'm quite certain that in a lot of cases there would be similar or close to similar solutions that would exist. And ideally, you would want to study that and then figure out what is that uniqueness that you can bring in your business model that would make help you make a very concrete pitch to that venture capitalist. Shrey has a question about an example of a good value proposition. So, Shrey, I think there are plenty of examples out there. If you look at it, look at Airbnb. look at its value proposition, not in the current times, but in the erstwhile times, it came out with a very different value proposition depending on who it was targeting. So your value proposition will actually emerge from A, what is the problem you're trying to solve, B, who are your clients or your customers, and based on that, your value proposition will get defined. And for instance, if you are to this scenario, look at just pick up any one player, maybe look at again Airbnb for again. So you've seen their value proposition change in times of COVID from where they were to where they are. A lot of hotels have changed their value proposition. Why do you think a lot of hotels have started delivering food when it comes to people's places instead of really inviting them over? So that value proposition A keeps changing based on the current scenario, but those are just examples of how people keep adapting it. But yes, your value proposition will get defined by your clients, your customers, and what exactly you're trying to address for them in terms of a problem. Tanisha, you had a question here, which is it okay to put forward two different services at the time of pitching? So only if they add up. You can't be having complementary services saying, okay, either this idea or that idea. So you've got to have one idea, and if there are two different services, they've got to add up logically and sync up with each other and sort of have that connection. Then can you put up these two different services for pitching? But it has to be part of one larger plan. It can't be two separate plans that you're putting up, which is like a either or scenario. Okay, so Shambhavi has a question here, which is it necessary for the ideas to address a specific problem to COVID only, or can we have an idea in general? No, Shambhavi. So the problem statement is very specific to this challenge, and you will have to stick to those guidelines. The problem statement for this year is that how can you help organizations or industry, counter or manage the impact of the pandemic? So within that, you can pick up, either one specific problem or a host of problems which possibly are interrelated and address those, but will have to be within the larger scheme of things, else your idea will get disqualified. So that's the idea of having this broad problem statement out there. Is there a limit on the number of slides in the presentation submission or for the video duration? Yes, Ankita. So you would have received those email instructions. The video is not supposed to be for more than 10 minutes, and the slides are limited to about 9 or 10 slides. There's a format that has been given, which is the agenda of your slide, and those are the number of slides that we are looking at. We would not accept any submissions which violate those guidelines. How do we make our solution more accessible to the economically backward sections of the society? So essentially, depending on what solution you are targeting, we can help put a customized plan around that. But you'll of course have to look at various scenarios. It can't simply be about subsidizing whatever you're offering. You'll also have to look at your entire supply chain. You'll have to look at the entire value proposition, and you'll also have to look at the scalability and the feasibility of that. So there'll be multiple factors that will get woven in when you're looking at creating a solution which is accessible to the economically backward sections, and we've seen teams do that as well. So A is of course start with a normal scenario and then look at how you can build it for the larger benefit of the society and for the larger good. That would be my recommendation. Ishika has a question that the 10 minutes video which we have to submit should include the PPT as well as the explanation by team members as well. That is correct, Ishika. So, what we're expecting in this video is just like how you would come to us and give a presentation, right? So, you would possibly be in a virtual scenario on a platform, and each one of you would be visible in that platform, and each one of you would be talking and describing, or talking about each and every slide. Now, talking about each and every slide does not mean that you're reading off the slides because there's negative marking for that. But what is it on the slide and what is it you're supplementing on the slide? So while for instance the speech structure that you can see here, I can read off all the points, but I think the true value add would really lie here in possibly bringing focus on those key points here and highlighting where I want to draw attention to. So that's the expectation. If you have any customers or clients that you want to also interview and you want to include snippets of those folks in your presentation or the interview, feel free to do that as well in your video. So there's a question from there seem to be a plethora of questions. Okay, so I'm just going to take them one by one. So, Raman, should the solution solely be focused on the pandemic problem? I've just addressed that. You will have to stick to the brief because that's the objective of this year's competition to be, and it doesn't have to be COVID pandemic. It is a pandemic scenario. So, can be a pandemic which is, which because pandemics are not going to end, they're going to keep coming every now and then. So, it should be essentially making organizations or the industry more resilient to pandemics that come in. COVID is just an example of a pandemic and how it can disrupt industry and organizations, and we can take our learnings from here. But yes, a pandemic situation in general, COVID, not necessary. All right. What if the solution requires huge funds and significant government compliance? Should we go ahead with the idea in that case? So, Arishi, you should definitely give it a shot. If you're very convinced about the solution and you think it can really make a difference, then you should definitely explore that possibility. I'm quite certain that when you're doing it, you will certainly look at how it could fit in the larger scheme of things because you don't want to invest so much of time and only to later figure out that, okay, now we are not compliant with the government regulations. So, at least that awareness that this could possibly not work in the government compliance scenario, or at least there are regulations that may not act as a roadblock. So that awareness should definitely exist because you can't do something completely disruptive only in the end to discover that oops, we are just not compliant at all, so we can't go ahead with that idea. So I would recommend that if you're convinced and at least you have some familiarity with the government regulations, specifically in that sector and in the context of your idea, and you still think that there is room for it, feasibility, there's feasibility for it, I think you should definitely go ahead. Do not worry about the funding at this stage. Uh, Abdul has a question here that when we're trying to get into the industry, where is the basic value whereas the basic value proposition is same. I'm sorry, I don't know if I'm reading that right, but let me read the whole thing. Which has low margins and only a certain business model works. What parameters do we think of differentiating? Okay, I think you should really differentiate when it comes to you know how unique is the impact that you're making with what you're presenting in terms of this thing. But as you said, there is a very basic value proposition, but I'm quite certain that there will always be room and scope to personalize it and to enhance it. So that is where your focus should really lie on, Abdul, when you're looking at specific industry where at least the premise of your problems, or your solution, and for anybody else who would do it would remain the same. And I think that is also true for our problem statement. If you look at it, the basic premise is to have everyone deal with the impact of the pandemic, and within that, of course, whatever we do will just make the organization more resilient. Any process changes or anything that they're doing differently, etc. I hope that addresses your question, but happy to also chat up with you separately. Do feel free to mail us on that. Sarim, you have a question here. Whereas, can the idea be non-profit service based and not based on revenue generation? It can be, Sarim, but at the end of the day, for you to survive, you will have to find out where you're going to get your revenues from. And that is what exactly somebody is going to ask you also when it comes to your business model. Because purely non-profit thing on initial funding may just last for as long, but you still have to look at its scalability and sustainability. And that's where funding will become very important. And if not revenue generation, but at least know your source of funding and how you're going to essentially work on the sustainability and the scalability piece of it. That will be important. Okay, so Abdul, I'm presuming what you put out here is uh, an example of the query that you were asking, which is Bounce or Vogue or Ola versus Uber. But I'm quite certain that they also build in their own very specific value propositions. Whether it is for their drivers, whether it is for the customers, one way or the other. And within that basic premise or the basic platform or value proposition, they do a little bit of tweaking every now and then depending on the scenario, and that's exactly what you're looking at out here. And that tweaking will come in either in your business model or how you're treating your clients or customers, or what is that one unique thing you're doing. So you'll have to give that some thought in the context of your idea. Okay, Sahitya, you have a query here. We haven't received certain emails sent. The team here will take note of that, Sahitya, and they will make sure that you get those emails. Those emails have been sent out between yesterday and day before. And Kashyap, you also have the same query that you haven't received the email instructions with the deck and the 10-minute video instructions. So the team here will take a note of that. I'm also taking a note of your names, and we'll make sure that you get those. Those emails would have come in from the Dare to Compete team on the email IDs with which you have registered. Okay, Vishal Tiwari here has a question that if you're going with an idea which is already done by someone else, but we still wanted to with the same business model, but in the modified version, that would be allowed and helpful for us. So, Vishal, you'll have to be careful about certain things when you're looking at what someone already done. You want to make sure that you are not exactly replicating that model. You want to make sure that your idea is really standing out, and you also have to have a justification that if it already exists, then why exactly are you doing it? What is it that makes your solution unique as compared to the other existing solutions? Those are very basic questions that you will essentially that'll come your way, and you need to be ready with those responses if you're already picking up something that exists out there, and you're working on those lines. Because when it comes to a jury, they're really trying to understand that how is your solution disruptive. Don't forget that innovation and disruption are very important judging parameters in this competition. So no matter what idea you pick up, whether it is something that has never been tried and tested earlier, whether it is something that has been tried and tested earlier, make sure that you are able to highlight that what really is innovative or disruptive about your idea. How does it stand out from the existing players in the market? So that's going to be supremely important when it comes to your idea being gauged. Okay, so there is another question here, that is it necessary that the idea has to address a problem specific to the Indian market only, or global or in general, as Indian market is different when compared to the global audience? But if you look at the industry, and if you look at the corporate sector, then you might find some similarities. I do agree that it would, there are differences, but we don't really cap it that you only look at this in the Indian context only. You can look at it in a global context. But remember, Shambhavi, when you put your idea out there to the jury, they would expect you to be an expert in that specific sector. So if you think that you are picking up a different country or from a global context, then you will have to do your homework also when it comes to all the regulations, when all the constraints that the solution is being proposed under or to address. So just make sure that you're very thorough with it. Largely what happens is people just find it easier for it to be in an Indian context because they're familiar with the environment. But if your idea is something that can be globally scaled, then why not? And I think I've already given the example of the last year's team which won the global finals, the India team from ITIS and Dhanbad. Their idea started with a small mine in their home state in Jharkhand, Bokaro, and then they realized that it was applicable pan India, and then they realized it was applicable globally. So, there are some solutions that can actually have a global applicability, and there are some that will be very specific in the Indian context. But what's really important is that how thorough are you when it comes to knowing the exact problems, that problem or the problems that you're trying to address, and how thorough are you in your knowledge of your customers or the clients that you're doing this for. I see a bunch of you stating that you haven't received those emails, so we have taken a note of those. Pritish, Soumyajit, and Bhavesh will take care of all these, and the team will send out emails to you. But with that, we'll call it a wrap. And we have another session which is lined up today at 6 o'clock. To see if you want to take out the time to attend it, because that's going to really add value for those of you who are right now grappling with what solution to pick up. You're grappling with what sector to focus on, because that is an ideation academy. It will tell you how to really go about, looking at it from the looking at various problems or the sectors or the industries from the lens of innovation. How do you identify your problem, and how do you really work on it using principles of design thinking? And for those of you also looking at inputs around, how do you assess market size? So this will tell you that, how do you really evaluate your customer, interview your customer, gather that right data, firstly understand if this is a solution you want to go ahead with, this is the need of the hour, and then eventually, get into the rest of the surveying piece where you want to gather information from your essentially clients, right? So okay, so Shambhavi again has a question. Is there an online platform where we can see previous years PPTs for an insight? So we will share Shambhavi closer to the time of as we inch closer to our national finals, we will make those PPTs available. Right now, we do not want to restrict anybody's creative thought process. We want to see, we want to essentially evaluate and give you a free flow when it comes to ideas. And slowly and gradually, we'll start helping you streamline all of that. So right now, it's an open platform, and we will slowly and gradually provide access to those as well, because right now the moment we give you that, it restricts, it sort of puts everybody in a box and they only think within that box, and that's exactly what we don't want to do it at this point of time for everyone. Okay, so is there a way that we can watch the previous sessions? So yes, Vaibhav, these sessions are available on the Dare to Compete YouTube channel. Please do make it a point, try and see if you can look at them, because they will add a lot of value. Yesterday's session we covered, a day before yesterday, we did a session on how to create a business model and a business plan. You will find a lot of value in that. And like I said, today's Ideation Academy will be really important for all of you. It will tell you how to really approach the problem, because that's exactly where the jury is going to come back and question you. And this academy is going to help solve a lot of those questions for you, by virtue of how do you evaluate a problem, what sector you could look at, how do you figure out what your clients are facing in terms of a problem. So great, I look forward to seeing you all at 6 o'clock. All of you have a great evening. Take care. Bye bye.